Morning, everyone, and welcome to this update. My name's John Shuttleworth. I'm the CEO of Centrepoint Alliance. I've been with the business for coming up to 3 years this August, and prior to that, I was with BT Financial Group for about 14 years. I'm going to, over the next 10 minutes or so, just provide you with an update and a snapshot of our business. And how I thought I'd do that is, firstly, I'll just cover off who we are and what we do. I'll talk through our competitive position in the marketplace, what we're focused on to drive growth, and a bit of a summary of our market outlook. Firstly, what do we do? Centrepoint Alliance operates in the financial services industry. Our core business is providing licensee services to a community of 1,380 financial advisors. Now, to run a financial advice business in Australia, you require a financial services license, an AFSL as it's referred to, that ASIC issues. So what we do is we support two different business models for advisors. One is what we call licensed, who are authorised representatives who operate under our licence. So Centrepoint has a range of several licences. So we've got 560 advisors that choose to be corporate authorised reps under that one of those licences. And the second model is self-licensed firms. So these are firms that have gone to ASIC themselves, applied for a licence, or we've helped them apply for their licence, and we provide services to them. And we've got 206 firms with around 820 advisors under that model. Now, the services we provide, the way to think about us is we provide all the core services an advisor needs to run their business. So we give them a license or help them with an application. We have licensee standards and templates. We provide compliance services, advice technology for developing SOAs and running their business, investment research, and approved product list, which is important about what investments, platforms and insurance they can use that we've screened, training and professional development, practice development, and really importantly, when they join us, they become part of a large community of like-minded individuals. Our first half results, 140 million in gross revenue, 4.1 million in EBITDA, 16.7 million gross profit, 4.9 million profit after tax, 12.4 million in cash on hand at December, and an interim ordinary dividend of 1 cent. Now, the investment thesis that I would put forward for those interested in the company is we're a leading licensee with a large and strong distribution network. But what I'll touch on today is we're expanding into other higher margin areas of the wealth value chain. So the business has strong earnings, consistent dividends, limited debt. There's an opportunity to expand those earnings because we have 69 billion in funds under advice, which creates the opportunity to enter other market segments. In December last year, we acquired a salaried advice business called Financial Advice Matters. In February this year, we launched a range of separately managed accounts called the IQ Managed Portfolios, all part of a strategy to grow our asset management business. And in the second half of 2024, we'll be launching a platform, a portfolio administration service, super and investment, partnering with a global leader in technology called FNZ. Now, to understand how we're situated versus competitors on the licensee side, this is a list of the top 10 licensees, and you can see the number of authorised reps, appointments or new advisors joining, those resigning, which could be due to a business sale or retirement or changing licensee. Centrepoint are ranked number 4 with 560 authorised reps. This is all ASIC data. But we are really leading the market on net growth, and we've put on 50 new advisors since 1 July last year. There's only 3 firms out of the top 10. Many of the players are losing market share and going backwards, and for the last couple of years, we've had a strong growth profile. The business and the way to think about what we're trying to do is there's 5 key pillars of growth. And we've only got a short amount of time, so I'll go through these reasonably quickly. But the first is growing the licensee and self-licensed business, the licensee services. So that's really about finding organic growth advisors that want to join us. We are selectively looking at acquisitions if we think there's a good cultural fit and we could absorb that, and we see opportunity to further grow the licensee business. Pillar number 2 is all about growing our salaried advisors. So we now have 19 advisors post the FAM acquisition, And I've got a slide and I'll just explain a bit of background on that. We also today have 310 million in funds under management in some managed accounts, but we're trying to expand that and grow that business. And I've got a slide on that. And the fourth pillar is around launching a superannuation and investment platform. Money needs to be administered by advisors on a platform that accesses managed funds, equities, managed accounts. And we're entering the platform market. It's a huge market with $1 trillion in assets. And we also have a lending license, and we've got a 3.4 billion loan book. We don't take any risk because we're largely sort of dealing with brokers who are writing loans from major institutions. So if we take the first pillar, growing the licensee service business, we've been one of the top performing licensees. And what differentiates us? Firstly, we're profitable and at scale. We have the ability to invest because we're profitable and build out new services. All of the core services are provided by in-house teams, not outsourced. And we have a comprehensive offer for licensed and self-licensed. We've had a very strong performance relative to peers. We're the only large full service provider to grow organically over the past 2 years. And we're also the largest provider of services to self-licensed firms. Now, as I've said before, our growth strategy is there's a lot of activity in the market with firms merging. This creates opportunity for advisors looking for a new home to join us. And really what's driven the growth is us focusing on delivering great service to create advocacy. And a lot of the advisors that we've brought on have been recommendations from existing advisors. Pillar 2, the salaried advice. Financial advice, when I refer to this, I refer to advisors that are employed by us as a business as opposed to us providing services. So we acquired Financial Advice Matters on 1 December. It was one of the largest corporatised financial planning groups in Queensland. It has around 1,500 household clients, around $1 billion in funds under advice, 8 offices through Queensland, and they'd been a corporate authorised rep with us since 2015. So we acquired the business, which has bolstered us to 19 advisors. And we had 4, we got there 15, which gives us the 19. We're also looking in the market for additional acquisitions and organic growth, and the acquiring financial advice firms a core part of our strategy. Now, what FAM actually did was it gave us some critical mass, a strong team, quality advisors, systems and processes, client management and referral partners. So before that, we were subscale, and we've now got a strong business. The third pillar is really about building scale in asset management. And I mentioned that we have a managed account business where we're focused on growing that further. We've just launched a range of separately managed account portfolios called the IQ portfolios. There's 4 growth profiles with different risk levels and 3 income portfolios. Now, for those that don't know, managed accounts are a professionally managed diversified investment portfolio. They typically invest in underlying assets like managed funds, ETFs and shares. Investors have the ability to get visibility of the underlying holdings and the performance and attribution. And they're highly efficient for both the client and also the advisor because the money is managed by a professional investor. The market has been growing very strongly in managed accounts, and you can see the chart there. It's estimated that we'll hit 354 billion by 2026. So many of our advisors need portfolios, and they invest in wide ranges of portfolios on the market, but we are constructing portfolios ourselves as an alternative for them in the market. Now, the fourth pillar is really around entering the platform market. And in doing that, we are a small company. So rather than trying to build the technology ourselves, we've partnered with a global player called FNZ. They have around $2 trillion in assets under management. They've done 650 implementations across 30 countries. And Centrepoint Alliance, we estimate we've got a large network with 69 billion in funds under advice. We've got over 500 firms and 1,380 advisors. The platform is going to be called Iconic, sort of implying, you know, icon as in strength and IQ as in intelligent portfolio management. This is a shot of what the technology looks like. We're in the final stages of user acceptance testing through the build, and this is an advisor, what we call a client holding screen, where they can look at portfolio value and performance and a range of other things. And there's obviously on the investor logins as well. So when you look at this, and for those that have invested in platforms and you think about Net Wealth, Hub, Macquarie, BT Panorama, this will be an alternative to some of those other platforms that are available in the market. The market for platforms is significant. It's around $1 trillion measured by Plan for Life. I've mentioned the size of our network and the advisors, but if you think through a 1% penetration of our network would give us around 690 million. If we got to 5, it's 3.4 billion. And if we got 1% of the market, we would have around 10 billion in funds under administration. So in the short time we have, that's a really quick overview of the business. We're very positive at the moment about our business momentum and what we're doing. The market is strong and positive conditions for advisors, and they're seeing huge demand for services. Equity markets have been strong. We're finally seeing some regulatory relief with the quality of advice review reforms. Some of the dislocation going on in the market is creating opportunities to accelerate recruitment. Our team has been around for some time, and they're experienced and really know what it takes to deliver outstanding service to advisors. And we've got our core licensee business, but some strategic initiatives coming on board with higher recurring margins. We recently updated our earnings guidance, and at the end of FY24, we'll have provided a guidance that will do 8.75 to 9 million in earnings. So thanks very much for your interest, and hopefully you've learned a little bit about Centrepoint Alliance. Thank you for your time.